NFT.NYC community, happy to be seeing you in New York, Times Square, April 3rd through the 5th. And as every year, we ask our friend David Pakman, the managing partner at CoinFund, to come and open our stage and give us a state of the union of NFTs. And David, that is because we respect you, we honor you and all that you and your team and teams over the years have done in this industry. You have backed so many entrepreneurs that came with an idea. And because of your support, both financial and in wisdom and in the infrastructure of your teams and what you do for portfolio companies, you've been able to help these folks scale from idea to scalable enterprise level type products that have served the masses globally. So we honor you, my friend, and it's always good. I think you and I have done this now half a dozen times. Jumped on the first time, I think it was like December 2018, preparing for our first NFT.NYC. I learned a ton from you then, and I expect I will learn some things from you today. Why don't you say hello to our community, and then we'll dive in and share a conversation.
Ian, thank you so much. You are so kind and sweet to have me on again. And I love the NFT NYC community. It's built by people who care, you and Jody and everyone else, Cameron, a great group of people who have just put together a wonderful community, great shows. It's an honor for me to be a part of it. Thanks for having me on again.
Maybe, oftentimes I cultivate very optimistic, very hopeful conversations, and that's on purpose. It's easy to be cynical. But I thought, why don't we start with some of the landmines that you're seeing so we can start there and build from there? What are some of the things that you are, when you look at the state of the industry, and we'll say we're focused on NFTs, right? These are digital assets, these are crypto collectibles, these are memberships, it's going into real estate, obviously, all what happened with art and continues to happen. But that goes beyond that. Right now, lots of Web3 integration with distributed ledger technology, lots of AI integration is starting to happen. When you look at the state of things, what are some of your big concerns about where we're at and maybe where we're heading?
Well, I think maybe just as a table setting, what's going on in NFTs. I like that we check in with each other every year to sort of see what kind of progress have we made, what setbacks have we made. And as a little preview, I think for my talk in April, I think I've got some good news and I've got some bad news. I think just starting with where we haven't seen a huge amount of evidence in the last year that NFTs have broken out of their sort of stagnation as a market. And what I mean by that, well, we look at a bunch of different pieces of data to figure out how healthy is the NFT market. We look at how much dollar volume is being done in sales across Ethereum and Solana and now Bitcoin. And there we see a little bit of growth. Maybe in December, we started to see a little bit of growth after several months of real stagnation. And in January is higher than December, and February, it's too early to know. But increasing sales volume is also a result of the increase in price. And Ethereum has gone up in price and Bitcoin's gone up in price. So we see increased volume, but prices are up, and most NFTs are denominated in crypto pricing. So that's why volume is up, dollar volume. We look at the number of buyers and sellers, and it's kind of been about flat. Depending on how you count, it's somewhere between, maybe 15,000 and 100,000 traders really buying and selling NFTs, and not a lot of net new people coming into the ecosystem. But we have seen floor prices rise for a bunch of NFT collections. That's the sort of the minimum price you pay to buy an NFT in a collection. And we'll talk a little bit about which collections have benefited from that. But all in all, we haven't seen a lot of new people buying NFTs. Although we've seen a lot of new mints. We've seen a lot of new NFTs, particularly in like the last 15 days. But the data on like, have we broken out? Are we, and by the way, just to throw some numbers against it, we're now doing about $850 million a month of volume. It's up from 500, but again, it's warped by the fact that Ethereum and other base unit prices are up.
Right.
So not a lot of excitement to say, wow, somebody's figured out tons of new use cases for NFTs and it's bringing lots of normies in, or it's bringing lots of new users in, or it's bringing lots of previous NFT owners back to buy or sell. Not a lot of data. So that's sort of the bad news about having seen a lot of growth.
Hmm.
But if you know where to look, there is a bunch of good news too. And let's talk a little bit about some of
Yeah,
it. Yeah.
please.
So let's just go through just the last few weeks, some really interesting activity. One, we have Yuga Labs, clearly the sort of biggest blue chip brand
Yeah,
in NFT creation, buying Proof's Moonbirds, which was a popular and successful creation. And so you're seeing some consolidation by the really market leader, NFT company, in
yeah,
sort of the PFPs and luxury NFTs. We have Pudgy Penguins is probably the best story we can tell over the last year. We weren't really talking about them very much a year ago,
yeah.
but this is a fascinating project. It's actually the entrepreneur running it now bought the brand and
Yes,
has completely revitalized it. And listen to this. So this is yes, it's an NFT product, but it can be tied with a physical plush toy that
yes,
you can purchase in stores. And they've been selling really successfully in a bunch of stores, including Walmart,
right.
where they most recently announced that they were in like 1,100 stores, or they were maybe 2,100 stores or 2,000 stores, and they've added another 1,100. So they're in now 3,100 Walmarts.
Wow.
And that's incredible that Walmart does not increase your footprint in stores unless your product
Product's
sells.
moving.
So clearly these products are moving, and
Yeah,
you buy these plush toys. They're adorably cute. Penguins are a super amazingly cute creature to many, and you take them home and you can scan a QR code, and then you get your sort of digital twin. It's your forever penguin that you could then use in their Pudgy World, which is
right.
like an online game. So this is a really exciting normie focused product, and we should watch it very closely. It's built on the ZK Sync Era blockchain, which is also a highly scalable, um, transaction-oriented blockchain that is could handle mass market use. So we're going to watch that really closely. Um, and what's also interesting about this collection is that the floor price, the least expensive price you can buy into an NFT, is extremely high. Just
Right.
this morning, it's higher than 20 ETH, which is about $58,000. So to buy a one of the 8,888 Pudgy Penguin NFTs, you got to spend a lot of money. So it's a coveted luxury product today that collectors are interested in. And its market cap, the total value of all 8,888 Pudgies, is now more than $525 million. It's $500 million of collection value. So it's extraordinary. And this is kind of, I think, is likely to inspire a lot of other products and creators to follow it. So another piece of good news. Let me offer maybe two other
Please.
observations. Good news. Um, One is NFT games, or NFTs in games. We have over the next 30 or 40, 30 or 60 days or so, some amazing game launches to watch. We have games like Alluvium, Stars Arena goes live, I believe, on March 1st on Epic, Steam, and Shrapnel, and another game called Off the Grid. These are more traditional PC and PlayStation games, like AAA games built
Right.
by extraordinarily talented game studios, but where the in-game assets are actually NFTs, which means as you acquire assets, earn them, buy them, you actually will own them
Yeah.
rather than sort of have them on loan from the game publisher. And then you could take them out of the game and sell them on NFT marketplaces. So this is something we've talked about in NFT land for a long time, but we maybe felt like we didn't have the right full-featured games to test the theory, and I think we'll have that. So let's watch those very closely. And maybe the last thing is Sotheby's this Friday is auctioning off Ether Rock NFT, which is expected to fetch more than $500,000. Again, it's an acknowledgement that at least in the eyes of the traditional art world, NFTs themselves can be equivalent to fine art, collected by fine art collectors, and fetch high prices. So there is some really interesting data to look at.
We talk about entrepreneurship for a moment and maybe focus on the case study of Pudgy Penguins. You may know the story of Pudgy Penguins, and you touched on it a bit. Can you give us a little bit more insight into that happening, and how do you think that might inspire entrepreneurs to say, okay, there's all this intellectual property, there's a community. It really can't be worse for this community. This thing is not going the right direction. What if entrepreneur, says to themselves, jump in and put all of my energy and enthusiasm and network to work on this thing? Could I do something like what's happened with the Pudgy Penguins turnaround? But can we talk a bit about the entrepreneurship opportunities, not just to start something brand new, but to revitalize something that already has a passionate community, already has some solidified IP, and maybe there's an opportunity to take something that is in a downward trend and allow it to have a new moment?
It's an unusual path, honestly, in the venture-backed world or tech world of startups. Very few startups come to market with an entrepreneur acquiring some assets of something that existed and then revitalizing it or breathing new life into it. But that is what's happening here with Pudgy. So I don't know that we should conclude, hey, this is a path a lot of people should follow. But I think let's look at some kind of true, remarkable characteristics of this product line. One, we know that plush toys and sort of cute physical collectibles have existed and have been very successful for decades. They tend to sell heavily in Q4, but still they have a durability to those product lines. And we've seen some reach mass market craze, right? We can go back and in time and think about Beanie Babies and other Webkins and these sort of collectible plush toys that may also have been attached to like a digital equivalent. Webkins is a good example, and Club Penguin, maybe even from Disney. In the sort of opinion of the current CEO of Pudgy, penguins are adorable creatures that no one dislikes. Like everyone loves penguins, so it's a good IP base to build a happy brand around. And it's sort of hard to disagree with that. But there's probably thousands of attempts at making plush toys that don't succeed.
Yeah.
But this team is defying the odds and has produced something really exciting. But that's not just a plush toy, but this sort of physical plus digital collectible experience. It'd be one thing to say buy a plush toy and then you can use it as a character in Disney's world. But in this case, you're buying a plush toy and you can use it as a character in Pudgy's world where you still own your character.
Right.
You're not borrowing it from Disney. When you delete your Club Penguin account, you got nothing left in the digital realm. But here, if you stop playing, you still own your Pudgy. So I think we should watch closely. I think it's exciting. And it is an alternate path, as you're pointing out, for entrepreneurs to think about how else can I reach success?
How should entrepreneurs think, and not just entrepreneurs, everybody in business, investors like yourself, think of the intellectual property aspect of the NFT world? Because that's one of the things that has come to really make more sense. More people are talking about the IP side of things during the last year, certainly during the last couple of years, when you see what's happened with Bored Ape Yacht Club, when you see what's happened with CryptoPunks. Obviously different collections have had some response, like Moonbirds had one response when it went Creative Commons, and Bored Ape Yacht Club had a different response when you own the intellectual rights to the NFT that you have. So what is your view of IP value and how a business person, a financial person, might want to look at the IP aspect of this industry?
I think a lot when I try to answer questions like that by looking at things in historical terms. So
Yeah.
if creativity has existed as long as humanity has, so we can go back thousands of years to study how did creativity manifest both as an art form and as a product.
Yeah.
And what we see over the course of thousands of years is that creativity tends to have a patron, and the patron tends to own the output of a creative person. They own a painting or buy a book, and there can be multiple copies of a work, but that creative works tend, over the course of most history, to be sold to those who will enjoy it.
Yeah.
You may enjoy it for collectible reasons, or because you love it, want to hang it on your wall, or you want to show it off to your friends, or for a bunch of different reasons. But that's really the history of most creativity, that there is a patron behind great works. and even good works. It doesn't have to be, we're not talking about just masterpieces here. But when the world went digital, when creativity went digital, we've talked about this before, it became really hard to enforce any form of ownership over something that's infinitely copyable and has no proof of who owns it. And as we've talked about before, NFTs change all this, and they allow intellectual property to have scarcity. You can limit the number of copies of it and to have ownership. And so I think, and my reason for the love of the concept of NFTs, of the invention of NFTs, and the reason I believe we will see $1 trillion market here is that this will allow digital creativity to again, which I think unlocks a massive market opportunity for the billions of people on the internet to own their own copies of digital works that they like. Maybe because, again, they're a collector, they want to show it off or hang it on a wall or listen to it. But this is taking some time to happen, and I would expect it could take a decade for a
Mm.
transformation like that to happen. But if the streaming era, the renting era, the access era to digital content, the Netflix and Spotify era, is actually just a short amount of time in as a blip in the era of ownership. So what I think many of us are excited about is running that experiment. We're going to run it in games. We've run it in collectible art and profile pictures. We're running it in fine art a little bit, and these is proving that there's some real interest here.
There's so many blockchains that are doing great work. Some technically, that's their strong suit. Some it's their governance model is a strong suit. Some it's just the market response is their strong suit, or they were here first. Uh, you've been involved with many, if not most, but I want to just talk about Dapper Labs and their Flow blockchain on this topic of IP. There's an announcement about what they're doing with Disney. So, what's your take on established IP, the Disneys and the Marvels and the DCs and the Star Wars of the world coming into this space on their own, doing their own thing with their in-house team, or as a strategic partner to an organization like Dapper Labs, who has faithfully invested creativity into this industry and built massively profitable business units like Top Shot and others. So, can you talk a bit about IP that's existing, partnering with the players in the industry, in this case Flow and Disney, and how should the folks that are the stewards of this IP be thinking through this industry, not as creating brand new intellectual property, but bringing what they have existing and creating new opportunities for their collectors.
Crypto's the Wild West, right? I mean, you know that. There's one of the beautiful things about crypto is we're trying to build an ecosystem that is permissionless, that anyone can build on without anyone's permission. And that makes things wild. One thing that large IP owners are scared of are wild ecosystems.
Right.
Like, is my IP going to be safe? Is it going to be, appear next to content that I find offensive? How do I know that the security works, that people won't feel ripped off after they buy something and it won't be stolen? How do I make sure that the contracts that we write around NFTs and the products we launch will survive security scrutiny or hacking attempts? These are questions that major brands always have before they release products.
Yeah.
And in the centralized world, those risks were lower. Disney can do a partnership, or a band can do a partnership with Fortnite, and Epic can make sure that their brand is safe. They can even like block certain words in the chat, right? They can ban users who are going a little crazy. It's really hard to do that in the decentralized world.
Yes.
So Flow's view is that to get the leading IP in the world, the top IP in the world, sports leagues, Disney, movie franchises, you will need to have experiences that are really consumer friendly and can be safe, at least brand safe. And so they built their own blockchain to be both scalable, because if you show up with Star Wars on the blockchain, like you can have hundreds of millions of people be interested. And so they needed to have infrastructure that could scale to mass market use, and also one that could be brand safe, that can protect some of the interests of the brand. So that was the genesis behind Flow. And sort of their thinking was like, could it be the Apple of blockchains? And
Hmm.
by that, I don't mean it's by any definition the most innovative. There are tons of innovation across
Yeah.
the crypto sector, but that it would feel like a clean, well-lighted place,
Yeah.
right? A place that's safe. And so I think that's been Dapper's approach, and now Flow's approach, which is now totally separate from Dapper and has been sort of spun out and led by a different team now, building a decentralized but brand safe, rich ecosystem for major brands. And I think that's in the interest of all of us, because just because you launch on one blockchain doesn't mean that your content can't move across chains. I mean, I think our
Right.
belief is it will. But if you have a place where you have a great consumer experience around NFTs, I think that's what makes the Disneys and the NBAs and the NFLs more likely to be here.
Of course, the increased revenue from half a billion in December to 850 million in January does have to do with the value of Ethereum. Also, there's certain very small percentage that are doing really, really, really well, right? They continue to hold their value or go up in value. This leads me to want to ask you a bit about marketplaces. I know you have Rarible, I believe, is a portfolio company. And I see Rarible as kind of the other side of Blur with OpenSea in the middle, and not discounting Magic Eden and all the others. But here's what I want to ask you about marketplaces. And of course, Top Shot has their own marketplace, and Jody's company, NFT Cred, will build a private marketplace for any brand. So there's a lot of options for marketplaces. But let's talk Ethereum marketplaces in the vein of the Blur, which has been explosive and has all these users, and it has not held to people paying the royalties that are in the smart contract. So Blur allows people to decide if they want to pay the royalty or how much percentage they want to pay. And then there's OpenSea, which they have some give and take in that area. And then there's Rarible, which, from my perspective, seems to say, no, no, this is in the smart contract. This is what the creator expects, and we're holding to this, even if it doesn't make us the most popular because it costs a bit more. So, can you talk a bit about these different ways of doing things? I think you may have more insight into the Rarible decision of how they've dealt with royalties, but I just love your thought process, because the royalty side is the business side. That's the side that allows a photographer or an artist or someone that's launching a membership of any sort to feel like, okay, maybe I don't make a lot of money when I bring this offering to market, but I can recoup on the back end as this becomes successful over time. That's not the case if marketplaces don't hold the line. And I'm not throwing shade at Blur. I'm just recognizing a reality amongst the marketplace differences today.
Yep, I think you're talking about capitalism in its true form here. In any market, we have mercenaries and missionaries. And missionaries are trying to build something that's sustainable for the long term, usually because they've got some sense of purpose behind it. And mercenaries are thinking about the next penny, just a way to outcompete and win the next transaction.
Mm.
And so it's no surprise to me that we have both types and some that blend in the middle. It's not a binary choice. But that's what we have in NFT marketplaces. We have folks that are kind of mercenarily going after volume in two ways. One, trying to be the cheapest by not respecting creators' wishes for royalties, and also by incentivizing your use of the marketplace with bonuses, rewards, airdrops, like things like that. So it's good that we have those, because those show us what some parts of the market want. And we are still in an NFT market where the majority of the volume, both number of transactions and dollar volume, are professional traders effectively that use a product like Blur and looking for best execution, right? Cheapest. But all of us who know that NFTs would only exist because of creators want creators to be paid, and not just paid a little, but we want them to be paid a whole lot more than the Web 2 model, where creators get a small VIG for their work and the platforms take all the rest. So Rarible and many other marketplaces are built to respect the royalties that creators need on secondary sales. Personally, I just believe that we're more likely to have a healthy ecosystem if we have creator royalties respected. And I actually believe the pendulum has swung back, and that most people are believing that was a silly thing to do for a small period of time when the market was collapsed. And now that things are going to come back and we're in a bull market again, we will see way more respecting of artist royalties or creator royalties. So I'm a long-term thinker. We invest in those missionaries, not in the mercenaries.
Yeah.
And so that's why, I would also point out that one thing you noticed is that I think we're likely to have not one or two marketplaces for NFTs, but millions. And
Yes.
we'll have one for every brand. Every brand will have their own marketplace that is a purposely designed user experience that highlights shows off their IP the best. And you've got companies like NFT Cred and Rarible. Actually, Rarible has a product that builds community marketplaces too for brands who want them. And so we're going to see a lot more of that. It doesn't mean that you can't resell your NFT somewhere else, and users will be able to do that. But I think we'll have many different choices, many different places for brands to sell IP NFTs, and many places for users to trade them.
Well, I want to talk a bit about content creators because this comes back to the royalty model. And also, the majority of content creators are not engaged in this new automation technology that ideally would make their life more smooth. It allow a lot of things they don't like to do, like the ongoing business transactions, to be automated through smart contracts. Today you're known as one of the top 100 venture capitalists, in the world, and you've been ranked that way by different publications, and certainly there's a reason for that. There's a reason why all of the conferences in Web3 ask you to come speak and bring you on their podcasts. And even outside of this industry, people are seeking your insights. But in your early career, you were at Apple. And you're there several years, and the last couple of years you focused on founding the partnership unit, Apple Music Group, and then you went on into the music industry as an executive with other music e-commerce approaches. So you have this unique insight as an executive and thinking through partnerships, and how does a business like Apple work with labels and artists to take advantage of this new model, which at that time was digital leasing of music, right? Lease a song on iTunes for 99 cents. So when you think through the market of music, podcasters, video, what is the opportunity for content creators that are making great money on YouTube, or they're starting to generate some revenue through X's new Twitter content creator platform, and they say, okay, I have these things, I have sponsorships and advertising, but what is the perspective that you might sit down and share with either a large organization like a label, a publisher of sorts, or an individual or a band, or a group that's putting together film, audio, or written of that nature?
I love this question, Ian. And let's go really top down. Let's just have a philosophical conversation for a second.
Yeah.
Across all forms of art or creativity, film, TV shows, music, digital design, what percentage of the proceeds of those products do we think should go to the creators themselves? So in the case of a song, talking about the songwriter and the performer. In the case of a film, I'm talking about the writer, screenplay writer, the director, or the actors. In the case of a book, the author, right? A blog post, the author. In the case of a blogger, the author. In the case of vlogger, the video crew and the talent. What percentage of the total economics produced by those works do we think the creators should have? And maybe we would start with just a binary choice. Do we think it should be the majority, greater than 50%, or the minority, less than 50%? Well, I think almost anyone would say, well, they should have the majority. I mean, maybe not all of it, but the work wouldn't exist without the creators.
Yes.
So now, if we just start with that simple premise, what percentage of the economics do creators actually get in the case of books or music or being an influencer on YouTube? And the answer is almost always far less than the majority.
Right.
Somewhere between, depending on who you are, what the platform is, what type of art it is, 10 to 50%,
Yeah.
probably less. This doesn't seem fair, but it has persisted for centuries. So one reason many of us get excited about Web3 and NFTs is because it neutralizes the advantage that the middlemen have, and allows more of the economics to flow to the creator, which just feels just and fair. And if you meet musicians and creative types, you'll find that almost every one of them, almost everyone, not the top 0.1%, but almost every one of them is a hustler. They're hustling to make it work. They
Right.
don't know where their next paycheck comes from. Maybe they've been successful enough to have a little bit of buffer, but economically, they're just always trying to find the next thing.
Mm.
And so many are brilliant creators. Our world is enriched by their art. So what compels me to be excited about NFTs in particular in Web3 is that we now have the technology to package creativity in a way where the majority of the economics can go to the creator and much less to the distributor, to the marketer, to the marketplace, to the technology. Now we're not there in that world yet, but
Right.
that's the exciting piece here. And even in the newest forms of expression, like influencers, or as you pointed out, YouTubers. YouTube's the most generous of all the new platforms. They share about up to 55% of the revenue received through advertising on YouTube with creators, but not evenly, not with all creators. But boy, the TikToks and the Instagrams, and of course the Twitters, share less than 1% of the revenue derived. All of us are just suckers for populating those services with content, even the ones who are really good, because we get so little of the economics. So what I want to see happen, and so many entrepreneurs want to see happen, is we want to build a world based on crypto rails where the majority, not 100%, still got to pay pieces in the middle, but the majority of the economics go to the creator.
Mm. I want that world too. I also recognize that those that participate in the creation of things, even if they are not the primary creator, today it's very hard for all the parties that participated to be compensated. And so this causes, I think, in today's market for people to kind of operate out of a fear and anxiety mode of like, well, what do I need to do? What lawyer do I need to have to back me to make sure I get my piece of the pie? Where with smart contracts, you attach every participant's wallet to a smart contract and those payments can be made. Before we wrap, which, I could talk with you for the rest of the day, David, but I'm gonna let you go. You have a
I
busy
love
life.
that.
Um, let's talk a bit about AI, the automation that we call AI, which is just machine learning. It's large language models, it's massive amounts of data and huge compute that allows these things like ChatGPT and now Sora with videos and whatnot. And there's many of these. Gemini 1.5 just came out. There's a lot of exciting development in AI. How can AI multiply, sorry, yeah, I guess multiply the impact. That's what I'm looking for. There's an impact made with the automation of NFTs. When you add in this AI opportunities, what do you see happening over the course of the next year? Because a ton of people, as I mentioned to you before we got started, at NFT.NYC, when they put their talks in, a large percentage say, well, I want to talk about this type of AI when this type of NFT project in this industry. So, what's your take on AI and NFTs?
Well, I think most creators are pretty excited by the tools that generative AI allows for. I mean, they've been bundled into Adobe products and Google products already. Of course, we've got Midjourney and all these other exciting new tools for to letting us use AI as an assistant to our creative desires. And I think just like any new technology, there will be huge artists that emerge from the use of that. Just like we saw the 80s based on synthesizers and drum machines, we're
Right.
going to see an explosion of art because of and artistic creativity because of generative AI.
Mm-hmm.
But I'm paying attention mostly to the other side, which is how are these tools being created? Who's going to control them? And is there going to be a fair distribution of those?
Mm-hmm.
And one thing in particular where crypto is helpful with AI is it asks the question and allows us to ask the question, what data was used in the training of these models?
Yeah.
And who owned that data? And are those content owners being compensated for the use of their data in the training of these models? Um, this talk is going on YouTube. Google, I imagine, no one's very clear about this, is scraping YouTube for their video creation AIs, their LLMs. So this is our work. This is your and my work right now. And are we going to be compensated if this video is being used to train AI? No, we're not. That's not what's happening. But Web3 would allow that to happen. We could ensure who all the content is owned by we could mint all content as NFTs. We know who the owner is, and we could create opt-in lists of all the content that is permissibly allowed to be used in the training of of AI models, as long as some compensation is paid back through tokens or some other mechanism. So we could pay creators to allow their works to be used in the training of LLMs, which is not happening today. And all of everyone listening to this should ask Google and Microsoft and Amazon and Apple and OpenAI, why aren't you paying the creators for their works? And second thing is we could have the compute power required to build and train these models be more decentralized and run on decentralized networks to let anyone use them, because right now only those big 5 or 6 companies have the power to do that.
Everybody watching this video, you should rewind 2 minutes, listen to what David said a couple times. It's very important to understand the importance of what AI can do to hold these massive trillion-dollar corporations accountable, because AI, as we call it today, is really the culmination of all of us putting our data online, these companies scraping that data and allowing them to now build software to output these incredibly amazing new technologies. So, David, as we wrap, I want to talk a moment about CoinFund. You know, when I met you, you were at Venrock. I think you were at Venrock for about a decade. They just closed a $650 million fund number 10 in January. So congrats to the Venrock team. But now you're at CoinFund. CoinFund has their fourth seed fund, their first venture fund. Can you talk a bit about who CoinFund is, what you do as a managing partner there, and what type of deal flow you're looking for? What type of folks might want to knock on your door?
Thanks, Ian. CoinFund's one of the oldest crypto native investing firms in the world, started by Alex and Jake back in 2015. And we have 3 investing products. We invest in the seed stage of crypto native projects and companies and protocols. Seed stage is, like $1 to $3 million first check into a company. We invest in the early venture stage. So when someone's raising $6 to $15 million, maybe in that stage of the company, we invest. And then we also have a liquid hedge fund, which trades crypto in the open markets. So those are our 3 strategies. We're about 25 people, and all we do is crypto. In every slice of the crypto market, where we love meeting the best teams. Super excited. And it lets us focus, since we have a seed stage fund, we can focus on the bleeding edge, like what is next in crypto. And then because we have a venture stage fund, we can focus on what's working, what is demonstrating product market fit. So we love meeting the best teams out there working on interesting stuff. And I'd be delighted to meet anyone who's listening to this.
And how about LPs? LP might hear this and say, wow, that's a cool approach. They have the seed fund, the VC fund, they have the hedge fund opportunity. There's 3 different ways by which you're putting LPs' money to work. Are you always talking to LPs and continuing to raise? Would LPs have an open door to come and investigate what CoinFund is doing?
The SEC has really strict guidelines about when we can talk about and market the availability of our investment products to LPs. And I'm not in a moment where I can do that. So I'm afraid I can't answer that question.
Well, that is a fair response. And I think the focus of the question, anyways, is what you're doing in the market and the opportunity for folks that are looking to raise to give CoinFund a chance to participate in that, if that's a good fit. David, we look forward to having you open our stage on April 3rd there at the Javits Center. You've done this for us last year at Javits. You did it the year before in the Radio City Music Hall, which was so fun. We always appreciate not just how articulate you are, but the preparation that you put in. I don't know how long you and your team work on your slide deck, but every time I look at it, I go, that's a beautiful slide deck. That's a lot of data. And you somehow take all of this data that could be seen as boring and you bring it to life in the way that you help us kick things off. We thank you for that. We welcome it. And I hope that you have a wonderful month here leading up to our event, NFT.NYC, April 3rd through the 5th. David, I'll see you again soon.
Can't wait for it, Ian. Thank you so much.